Mortgage rates barely moved this week, 6.16 to 6.17%, just 1 basis point. Meanwhile, unemployment claims jumped 22,000 in a single week, from 209,000 to 231,000. This should have been pushed rates down like crazy, but they didn't budge. For DSCR loan rates and rental property investors, this tells you everything about where we are headed in 2026. Stay until the end. I am going to show you exactly how the amount you put down can lower your DSCR loan rate by 25, 50, or 75 basis points, even when the market refuses to move. The jobless claims paradox. Why higher unemployment didn't drop rates? On February 5th, the Department of Labor released employment insurance claims data showing 231,000 initial claims for the week ending January 31st, a jump of 22,000 from the prior week's 209,000. Compared to the same week last year, claims are also modestly higher, signaling a cooling labor market. The advanced unadjusted insured unemployment rate held steady at 1.4%, with over 2.2 million Americans collecting state unemployment benefits. Here is the disconnect. Weaker employment data typically signals economic softening, which should push treasury yields and mortgage rates lower as investors seek safety in the bonds. But this week, the 30-year fixed mortgage rate moved from 6.16 to just 6.17, essentially flat. Markets treated this labor data as incremental rather than shocking, meaning bond traders aren't convinced the economy is weakening enough to force the Fed's hands on rate cuts. For DSCR loan rates, which sit 0.5 to 1% above conventional rates, this means rental property financing is still stuck in the high 6 to low 7 range for top-tier borrowers. The midweek rate dip that disappeared by Friday. Here is what most investors missed. Midweek on February 4th, mortgage rates actually did drop. Mortgage News Daily reported that 30-year fixed fell from 6.2 to 6.17%, a 3 basis point improvement, specifically sitting downbeat employment data. As the catalyst for about 24 hours, it looked like weaker job numbers might finally give DSCR investors some rate relief. But by the week's end, that dip evaporated. The national average settled right back at 6.17%, proving that small intraday or intra-week moves don't necessarily signal a new trend. This is critical for rental property investors trying to time rate locks. You might see a narrow window to grab a slightly better coupon midweek, but the overall regime is still at 6% conventional award and high 6s for DSCR loans. The takeaway: if you are within 30 days of closing, these 3 to 5 basis points window are your best bet to lock. Waiting for a major downtrend could mean missing the opportunity entirely. Now let's look at the rate update together with the major economic indicators. Initial jobless claims rose from 209,000 to 231,000 for the week ending January 31st, with the insured unemployment rate holding at 1.4%. This modest pickup in layoffs showed a cooling labor market, but wasn't dramatic enough to trigger a bond market rally that would pull mortgage rates materially lower. For DSCR investors, steady joblessness at these levels supports continued rent payment capacity and occupancy, but underwrite conservatively. Assume steady rent growth, not explosive gains. Now let me unpack the strategy I promise you. Put more money down, of course, if you have it. Lower loan to value is one of the biggest levers you control for slashing your DSCR loan rate. Crossing key LTV thresholds like dropping from 75 to 70% can trigger immediate pricing improvements that save you thousands over the life of the loan. Even if this stuck at 6% environment, that extra equity can be difference between a 6.875 rate to a 6.25 or 6.5 rate. If you want to explore other strategies that work better for your specific situation, I will walk you through exactly how to position your next deal for the best possible pricing. And just like that, these are already old news. Thanks for watching. If you found this video helpful, give it a like and subscribe for more expert insights on real estate investing. If you are ready to take the next step or have questions, call or text me at 718-300-3503. I'm here to help you understand the market, find smart loan options, and turn today's challenges into tomorrow's cash flow.
If you want to learn how to use financing to grow your portfolio, check out my DSCR Loan Tips and Tricks playlist. Inside, you'll find powerful strategies, lender insights, and real-world tips to help you close more deals and maximize your cash flow.